Hi guys, this is Mr. Ibrahim the Trader of Gova Trading Academy. So in today's video, I'm going to be showing you some of the things you have been asking me questions on. So it means that on this video, I'm going to be answering some of the questions you might have. One of the questions some students are asking me is, how do we take trades on hidden zones, Now let's look at this gold trade. Let's look at this gold trade here. First of all, I'm going to analyze the previous month on this gold. So this is the previous month monthly equilibrium line. The blue line is here for the previous month. We all know that the new month equilibrium line is here. This is the equilibrium line for the new month. But right now, I'm not trying to analyze the new month. I'm trying to analyze the previous month, just because there's something I want you guys to understand. It is because I want to show you guys something on the previous month. Now, this is the monthly equilibrium line for the previous month, the MEQ. Now, I'm switching to H3 time frame. On the H3 time frame, on the previous month, this area has not happened yet on the previous month. So it means that this area has not. Let's check the date first for the new month. So it means that this area has not happened yet. As at the time of the analysis, this area has not happened yet. Which also means that we have, let's say, for example, this area has not happened yet as at the time of the analysis. Hold on. Let us assume that as at the time of the analysis, this area has not happened yet. So what alignments do we have? What alignments do we have? The alignment we currently have is we have a buy alignment. Now, one thing you need to realize is, as a trader of the Procos, whenever you are analyzing the Procos for what weekly equilibrium trades, whenever you are analyzing weekly equilibrium trades, that is the work trades. Now, to consider your alignment in a very easy way, you need to consider it using the blue line below. The blue line is below. And then we all know what current market price is. We all know that this is a current market price. This is a current market price here. Now, always use the current market price as your green line. Always use the current market price as your green line. So let me assume that this current market price here is my green line. So let me just mark it out as my green line. If that is my green line, it means that I have the blue line below and then I have the green line above, which automatically qualifies to be a buy alignment, which automatically qualifies to be a buy trade alignment. So you can see how easy it is now to recognize alignments using this simple logic here, simple method. Now, this is the green line. Remember, I'm still analyzing the previous month's weekly trade. Now, on the previous month, remember, as at the time of the analysis, this area has not happened yet as at the time of the analysis. Remember, as at the time of the analysis, this area has not happened yet. Okay, which means that what we have is here, is just around here. What we have is the weekly equilibrium line is here. And when we look left, the only formation we see looking left is this formation here. And how do I know that? Let me mark out, let me highlight the formation. Let me highlight the zone here. Let me highlight the zone. After highlighting the zone, then I'm going to switch to the D1 time frame so that I won't lose the area. Now, when I switch to the D1 time frame, you can see that this is the candlestick we are looking at. This is the candle we are looking at here. We are looking at this bullish candle. Remember, guys, remember I told you one rule about understanding the demand, a very good demand on the D1 time frame. Remember, guys, remember I told you that on the D1 time frame, whenever you switch to the D1 time frame, the demand of the bullish candle is from the opening to the wicks below. It's from the open to the wicks below. That is the demand of the candlestick. That is the demand of the candle. And I also told you guys that highlight the demand of the candle using your proximal line and distal line. Highlight it. Make sure the 3 dots is sitting on the wicks of the area. And then I told you guys that after highlighting your zone, switch back to a lower time frame to see how the formation looks like on a lower time frame. Now you can see when I switch back to a lower time frame, this is where the formation is pointing to. This is where it is pointing to. All right. Now, when you see that that is where it is pointing to, what you need to do is you need to mark out your proximal line and distal line in a more proper manner, in a more proper way. Now, we all know that to mark out proximal line and distal line, this is a drop-based rally formation. We all know that this is a drop-based rally formation. Market price drop down from here. Market price from this point here, market price drop down. This is the base. And then we saw a rally in price here. We saw a rally in price in that area. Then what can we do? What we should do is we can clearly see the basing candlesticks also. You can see that this is where the basing candlestick is. Now, we all know that our distal line is going to be here on the formation and our proximal line is going to be here on the formation. All right. Now, that is another way of marking the proximal line, distal line. It is the normal way by marking out your distal line below the zone. That is the lowest point of the base, and to mark out your proximal line at the highest point of the bearish candlestick. And you can see market price triggered our zone here. Market came back to the zone, triggered the zone, and then went up in profits. I believe you can see that. Now, the reason why I'm explaining this trade to you guys of the previous month is because many of you guys are asking me the question, Mr. Ibrahim, why did you take the gold trade? Why did you take the zone that you took on the gold trade? On the previous month, which is about last week, remember guys, I sent a result, my result on this gold trade last week, which is this same area here, this area. I sent my result on this exact area. Now, the reason why you guys are asking me the question is because when we switch to the D1 time frame, the zone is sitting on the body of the candle. The zone is sitting on the body of the candle when we switch to the D1 time frame. Now, remember guys, what I'm trying to do here is I'm trying to teach you guys to understand what is right and to understand when you can compromise a little bit. I'm trying to teach you guys to know what is 100% right, the right thing to do 100%. What you need to understand is the right thing to do as a trader is to understand that your zone has to be sitting, your proximal line, your yellow zone, it has to be sitting on the demand side of the candle. It can be sitting anywhere around here of the demand of the candle, which is good. However, I told you guys that at any point in time whereby the zone is sitting on the body of the candlestick, it is not a good situation. It is not a good situation. Now, that is because I'm trying to teach you guys how to know I'm trying to show you guys how to know what is 100%, what is 100% facts, okay, and knowing how to compromise. And I'm also trying to show you guys how to compromise, knowing how to compromise in some situations, okay. So in some situations, you guys can compromise. You are not a robot. In some situations, you can compromise, okay? You can compromise as a trader. But by compromising, you know that what you are doing is not the 100% correct way of what we usually use in our strategy, okay. So but you can compromise. When I say compromise, it means that you know that what you are currently doing by taking a zone that is sitting on the body of the candle, you already know that the trade is not it is not as stronger as the zone that is sitting on the demand side of the candle. That should always be at the back of your mind. Whenever you have a zone at the demand of the candle here, it is more stronger than the zone that is sitting on the body of the candle. It is more stronger. But what did I teach you guys? I teach you guys that you need to know how to set multiple traps. You need to know how to set multiple traps. If you want to catch a rat, if you want to catch a rat, if you want to catch a rat, you need to know how to set multiple traps. You cannot just set one trap and expect to catch the rat. No, you need to set about two to three traps to be able to catch the rat in your house, okay. This is just a rough example, okay. This is just a rough example. Now in this pro course, you need to know how to set about maximum of two traps. Maximum of two traps. Now, the first trap is if you see a zone at the opening of the candle, which is the opening of the bullish candle, it is a good trap, which is trap number one. Trap number two, you might see a hidden zone. Sometimes on a lower time frame, you might see a hidden zone that when you switch to the D1 time frame, the hidden zone is going to be sitting on the body of the candle. So this can be a trap too. This can be a trap too. It can be a trap too. Just make sure that the hidden zone is not sitting completely at the middle of the candle. It is not sitting on the middle of the candle, because now you can see that this zone here on the body of the candle is sitting very close to the opening of the candle. It is sitting very close to the opening of the candle, which is still okay. You can compromise that. So I hope you guys understand what I mean by compromising. It means that you don't have to be very rigid. You should be a flexible trader. You should know how to be a flexible trader in some situations, okay? In some situations. All right. So that is what I did. I was being flexible in my analysis, and that is why I was able to take this zone here on gold, even though the zone was on the body of the candle. All right. Now, and the reason why I did this also is because, does it make sense for me to mark out my zone here and then totally ignore what is happening above here? Should I mark my zone here and totally ignore what is happening above here? No, that is not correct, because we don't have any zone below. We don't have any zone below here. The zone is not below. The zone is here. The formation of the zone is corresponding to this area here, which if we switch to the D1 time frame, it happens to be sitting on the D1 time frame candle body, the body of the candle. So remember, I told you guys that if the zone is sitting on the body of the candle of the D1, it is still okay. You can compromise. Listen, you can do what? You can compromise it. Now, by compromising it, it also means that you know that that is not the most strongest area in the market, but that is the only zone you can mark in the market. So which means you can still compromise it. Okay, so I hope I've answered this question. I hope I've answered your question. The student who asked me this question, I hope I've answered your question. So that is why I said you can compromise. You can compromise in some situations. Okay, you can compromise this type of trade by making sure that you set two traps. You set two traps by making sure that you set two traps. If you have if you have two zones, one zone is visible, one zone is hidden. So sometimes, for example, let us look at this pair. Let us look at this pair here. That is USD CHF. On USD CHF, let us analyze this trade. Remember, guys, in the professional course, the first thing you need to do in the professional course is to mark out your monthly equilibrium line. All right. So now let's switch to the D1 time frame. We usually mark out the monthly equilibrium line on the D1 time frame, which is exactly here at the opening of this bearish candle, because this bearish candle is the candle that is on the period separator. So I'm marking my blue line. I'm going to change the color here to color blue. I'm marking my monthly equilibrium line here because that is where the opening of the bearish candlestick is, on this period separator here. The next thing I need to do is to switch to the H3 time frame. So right now, I'm trying to take trade analysis on the weekly. I'm trying to take trade analysis on the what? On the work. I'm trying to analyze the work trade, okay? The work trade of this week, for example. Now, what you need to do is, whenever you're analyzing the work trade, you can see that automatically you already have your blue line. Your blue line is above. You can see that the blue line is currently above right now. However, you can see that we have the current market price below here. You can see that the current market price is also changing, right? It is also changing, if you notice. Now, the trick I'm teaching you here now is you need to make out this current market price at the back of your mind. At the what? At the back of your mind, this current market price should be a green line. This current market price should be a green line at the back of your mind. Now, if that is a green line, it means that the blue line is above, and the green line is what? Is below. The green line is below. Now, what alignment do we have here? Which alignment do we have here? It means that we have a sell trade alignment. We have a sell alignment. We have a sell alignment. Okay? We have a sell alignment. So I believe this is more simpler to understand how to mark out your alignment and so on. So you can see right now, you don't have to mark out the green line exactly, because the current price is what you automatically used as your green line. Okay. Now, since we are able to determine what the alignment is, right now, we are able to determine that the alignment is a what? Is a sell alignment. We are able to determine that the alignment is sell alignment, since we can see that the blue line is above while the green line is below here, The next thing you need to do is to do what? Is to switch to the D1 time, back to the D1 time frame. Switch back to the D1 time frame immediately after you confirm what the alignment is. Now, after confirming what the alignment is, which is a sell alignment in this situation, in a sell alignment, are you going to be looking at in a sell alignment? In a sell alignment, let me just write it here. In a sell alignment, are you going to be looking at a bullish candle on the D1 time frame, or are you going to be looking at a bearish candle on the D1 time frame? Are you going to be looking at a bearish candle or a bullish candle in a sell alignment whenever you switch to the D1 time frame? No, it doesn't make sense if you have a sell alignment and you are looking at a bullish candle. No, it doesn't make sense. It makes sense that if you have a sell alignment, switch to the when you switch to the D1 time frame, make sure you are looking for a bearish candlestick, because a bearish candlestick is what corresponds with a sell alignment. Because we all know that a bearish candle is a sell candle. Now, in this situation, on the lower time frame, we already determined that the alignment we have is a sell alignment, isn't it? Now, when I switch to the D1 time frame right now, as you can see, I'm currently on the D1 time frame. When I switch to the D1 time frame, I can see that we have a candle here, but that is not the candle we are looking for. We also have a candle here. That is not the candle we are looking for. This is a bullish candle, whereas I'm looking for a bearish candle. So the next, let me go to the next candle. This is the next candle here. The next candle here is a bearish candle, and this bearish candle is having a very good rectangular body, which is good, okay, which is good. And remember, I also told you guys about bad or good D1 candle. So this is a good D1 candle, all right? So now what you need to do is highlight the supply of the candle. This is the supply area of the candle, which means that our zone can be sitting anywhere around the supply of the candle, which is a good situation, all right? Now let me highlight the supply of the candle. Remember, after seeing the candle you are looking for on the D1, highlight the candle. Highlight the candle. Now, this is the supply of the candle, remember? This is the supply of the candle. That is why I'm highlighting the supply of the candle using my proximal line and distal line here. So make sure the 3 dots are sitting on the wicks of the candle, okay? Make sure the 3 dots are sitting on the wicks. Remember, I told you it is not proper like this. Make sure you do it like this. Now, after you are done with this, switch back to a lower time frame. Now, some of you are asking me, Mr. Ibrahim, from which time frame can we start switching to a lower time frame? Now, you can start from H3 time frame. You can start from H3 time frame. When you switch to the H3 time frame, then you can minimize the candle, and then you can start looking for a way to mark out your proximal line and distal line in a more proper manner. Also, you need to also consider if the zone is a strong zone or a weak zone. Now, in this situation, you can see that this is a strong drop zone that represents big banks, because we can see how market price, this is the zone we saw on the D1 time frame, the zone we highlighted on the D1 time frame. When we switch back to a lower time frame, starting from H3, this is the situation we find ourselves when we switch to the H3 time frame. This is where it is pointing to us, right? Now, it means that we have a rally-based drop formation, okay? We have a rally-based drop formation. You can see this is the rally in price, this is the base, and this is the massive drop in price, okay? Remember, guys, I told you about how big banks formation looks. Banks usually drop the market in a very strong way going down. Now you can see this movement going down here. This is a very strong movement going down. This is a strong movement going down, which means that banks are the owners of that formation, all right? Now, what you need to do is, after recognizing how good your formation is, because even if the candlestick is good on the D1 time frame, you have a good rectangular candle on the D1 time frame, but when you switch to a lower time frame, the candle formation is not good, it's not looking good, it is looking weak. Then you need to ignore the analysis, you need to ignore it and look for opportunities on other peers. Okay, we have many peers on the list, over 30 peers on the list. So you don't have to stay stagnant on one peer alone. No, you have to analyze other peers too. If one peer is not giving you what you are looking for, make sure you analyze other peers. Okay. Now, after seeing that the formation you have is a strong formation on the peer you are looking for, then you need to start marking out your proximal line and distal line in a more proper manner. Now, to mark it out in a more proper manner, I can mark my proximal line, distal line in a way like this. I don't have to teach you how to mark it right now, but we all know, you guys all understand what I mean. You can mark out the zone like this. You can mark out the zone like this. This is the zone. Or you can also, sometimes the zone might have two hidden traps. It might have a hidden trap. For example, now this is the zone. Now there's something you also need to know, guys. When you see your zone, the moment you are able to see your zone, for example, I've seen the formation on H3 time frame. The formation is a what? Is a rally-based drop formation. And I've seen where to mark out my proximal line. I have already seen where to mark out my distal line. Okay, I've seen that already. Now, after seeing where to mark out your proximal line and distal line, you don't have any right. You don't have any right by switching to a lower time frame again. By switching to a lower time frame, the moment you are able to see where to mark out your proximal line and distal line, stick to that time frame. Stick to that time frame. Okay. Now, let's say, for example, we saw our formation here on the H2 time frame, and we are able to mark out our proximal line, distal line here. Sometimes if you switch to the H1 time frame, for example, you are able to see two zones. We have the first zone is here. The first zone we have is here. The other zone we have is also here. It means that we have two zones around the same area. It means that this is zone 1, this is zone 1 here, and this is zone 2 here. Okay, so this is why I said you need to learn how to set multiple traps. You need to learn how to set multiple traps on your trade so that you can catch the rats. You can catch the rats by setting multiple traps. Okay, just make sure that the trap you are setting on the zones is a maximum of 2. Is a maximum of 2 traps. Okay, don't set anything more than 2, beyond 2 traps. Anything beyond 2 traps is overdoing it. You are overdoing it. Okay, so now the first zone here on the upper area, which is here, let me switch to the D1 time frame again. I can see that the zone is sitting on the what? On the supply of the candle. The zone is sitting on the supply of the candle, which is what? Which is good. Which is good. All right, it is good. Also, let me see what the zone is looking like. What the zone looks like on the lower zone. You know, this is the upper. This first one here is the upper zone. Let me see what is happening on the lower zone here. Now let me switch back to the D1 time frame again to see where the zone is sitting on. Now you can see that the zone on the lower zone is sitting on the body of the candle. It is sitting on the body of the candle, but not too far away from the opening of the candle. You can see it is not far away. At any point in time whereby your zone is sitting far away from the opening of the candle, you can see right now, this zone right now is far away from the opening of the candle. It is far away. This is not good. This is not good. Okay, make sure that your zone is sitting very, very close. Even though it is sitting on the body of the candle, make sure it is sitting very close to the opening of the candle. Make sure it is sitting very, very close to the opening of the candle. Okay, make sure it is very close, very, very close. That is another point I'm trying to make here. Make sure it is sitting very close to the zone. Now, in this situation, you can see that I told you guys that you can compromise, even though this zone is sitting on the body of the candle right now, you can still compromise on this zone. You can compromise and take the zone It is fine. It is fine. Okay, it is fine. So I believe I've answered your question. The question is it good to take zones on if the zone is sitting on the body of the candle? Well, if the zone is very close to the opening of the candle, yes, it is good. You can take it if it is a hidden zone. But you are only compromising. You are only compromising. However, you should always have it at the back of your mind that zones that are at the opening of the candle are more stronger than the zone that are on the body of the candle. That should always be at the back of your mind. Okay. Now that is it on this trade on USD CHF. That is it on this trade on USD CHF. You can see we are setting multiple traps here, trap 1 and trap 2. So you can see this is how to do it. This is how to do it. You can set multiple trap. It means that you are expecting market price to come back to this zone and work out, or you are expecting market price to come back to the upper zone and work out. Okay. Now, either of the two situations, one of the situation is going to play out. One of the situation is going to play out. Okay. Now that is it. Now, even though the two situations didn't play out, now you have to also understand that not every trade is going to work out. Okay. What matters most is you lose very small, but you win bigger, but your wins are bigger. But your wins are more bigger. Okay. So that is what matters in this trading. Even big banks usually lose money in the market, but they always make sure they are losing is very small and their profit margin is very, very high. That makes sense in any business. Okay. Now, that is it on USD CHF. Let's move on to Euro USD. On Euro USD, we all know this is the first thing we need to do by marking out the monthly equilibrium line here. And then the next thing to do is to switch to the H3 time frame to determine the alignment. Now the alignment right now is a buy alignment because I can clearly see that the blue line is below and then the green line is above. Because remember I told you the current price should always be your green line. Use the current price as your green line. Okay. So if that is the case, the blue line is below and then the green line is above, which automatically qualifies to be a buy alignment. Now, after seeing that I have a buy alignment here, the next thing I'm going to do is I'm going to switch back to the D1 time frame. Now, on the D1 time frame, I'm looking for a bullish candle. So this is not a bullish candle. So this is not the candle I'm looking for. This is not a bullish candle. So this is not the candle I'm looking for. This is not the candle I'm looking for. So I have a buy alignment. So in a buy alignment, we are looking for a bullish candlestick. Now, this is the bullish candlestick here. The next candle here is a bullish candle. Now, the demand of the candle is what we are focusing on. Okay. Now, this is the demand side of the candle. This is the demand area of the candle. Okay. Which is good. All right. So it means that you need to highlight the demand of the candle, highlight it. Then the next thing you need to do is you need to switch back to a lower time frame, starting from H3. When you switch to a lower time frame, you need to understand that this is the formation. When we switch to a lower time frame, this is the formation here of a drop-based rally. From this point here, you can see how market price dropped down. Then we have the base here. Then we have the rally in a strong rally in price. All right, we have a strong rally in price. Now, the next thing you need to know how to do is to mark out your proximal line, distal line in a more proper manner on the formation. So this is how to mark it. Mark your distal line at the lowest point of the base. Mark your proximal line at the opening of a bearish basing candle. That is it on this trade. Okay, that is it on this trade. So sometimes you might try to highlight the zone and it is not going to be filling up. What you need to do is bring the yellow box outside, fill it up outside, and then take it back inside and then secure it. Now I can see that some of you are highlighting your zone like this. This is not the way to highlight the zone. It is very wrong like this. It is too much. It is okay to highlight it like this. It is very okay like this. Also, it is not okay like this, because you can see that the yellow box is outside the two lines that we have here. Okay. Also, make sure you don't mark your zone like this. It is not proper like this. You can see that the yellow box is outside the two lines we have. The proper way to mark it is to make sure you do it like this. The yellow zone should stay within the two lines we have. Okay. It is okay like this. All right. So the next thing you need to do is just to mark is just to highlight your zone as a buy before. Take a screenshot and save it somewhere, and then wait for market price to come back into your zone. It means that you are waiting for market price to come back into your zone and play out in a way like this. Okay, that is what you are expecting. All right. Now, what about in a situation whereby there's a hidden zone on this trade? What about a situation whereby there's a hidden zone on this trade? Sorry, guys. Now, if there's a hidden zone on this trade, it means that, let's see if there's a hidden zone on the trade. Now, you can see, guys, our first zone was here. Our first zone was below here. Then when we switch back to a lower time frame, we can see that there's a hidden zone here also. You can also mark it. Remember, guys, I told you guys you can set a maximum of 2 traps. Maximum of 2 traps is what you can set. After you set your 2 traps, you don't have to keep switching lower to look for what you didn't lose. You understand? The only time you can switch lower is by trying to adjust where your proximal line should be. You can try to adjust it in a more proper manner, but make sure you don't mark more than 2 zones. Okay, more than 2 traps. You don't set more than 2 traps. So this is okay here. Okay, so it means that we are expecting market price to either come back into the upper zone, or we are expecting market price to come back into the lower zone and work out. Either of these situations should be okay by you. Okay, so that is it, guys, on this trade, Euro USD. Now let us move on to Euro GBP. On Euro GBP, the first thing we need to do is to mark out our monthly equilibrium line, which is exactly here. The next thing is to switch to the H3 time frame, and then we can see that on the H3 time frame, the blue line is up, and then the green line is down. The current market price is down, which is our green line, which means we have a sell alignment. Even though I don't like this type of gap. Remember, guys, I told you guys we like to see a reasonable gap. We like to see a reasonable gap between the blue line and the green line. If there is no reasonable gap, it is not going to be a good trade. Okay, so make sure that it is a reasonable gap between the blue line and the green line. Now we can see that this is a sell trade alignment. Then the next thing I need to do is to switch back to the D1 time frame to look for a bearish candle. Now the only bearish candle I can see, this is not the candle we are looking for. This bearish candle is what we are looking for. Now, if that is the bearish candlestick we are looking for, then what do you need to do? You need to highlight the supply of the candle. Highlight the supply of the candle. After highlighting the supply of the candle, switch back to a lower time frame. Switch back to a lower time frame. Now, when you switch back to a lower time frame, this is the formation. This is where the formation is, as you can see. Market has been highlighted here. This is the formation we are looking for, rally-based drop. Now, after seeing the formation, make sure you are able to mark out your proximal line, distal line in a more proper manner on the formation, okay? On the formation. So I'm going to mark out my proximal line, distal line on the formation like this, because this is the distal line, this is the highest point of the base, and this is the opening of a bullish basing candle here. All right. Now, one thing you need to realize also is if your zone, the pips on your zone is looking too big, the pips on your zone is too much. If the pips on your zone is too much, this is 14 pips, 14 pips. So this 14 pips is okay, it's okay, it is okay, all right? You don't have to divide the zone into two parts anymore, since this is just 14 pips. So if the zone is too big, you can divide it into two parts, all right? So what that is that on that. That we are done with this Euro GBP trade. Now let's go to GBP USD. On GBP USD, the first thing I need to do is the blue line is the monthly equilibrium line is here, which is the blue line. Then the next thing is the H3 time frame. On the H3 time frame, I can see that what we have is the blue line is below, and then I can see that the current price is above, which means the green line is above, which automatically qualifies to be a buy trade alignment. And in a buy trade alignment, we are going to be switching back to the D1 time frame to look for a bullish candle. Now, the only bullish candle I can see is this candle here. Now, you need to highlight the demand of the candle, the demand side of the candle. The demand of the candle is here. Now, switch back to the H3 time frame. After switching back to H3 time frame, I can clearly see that this is the zone. This is the zone of the candle. This is the zone of the candle. Now, mark out the zone of the candle. Mark it out. Mark out your proximal line and distal line in a more proper manner. Mark it out properly. So that is it on this trade. Okay, that is it on this trade. On this one, you don't have to mark any hidden zone. It is okay like this. It is okay. The zone is okay like this. So it is not every time you mark hidden zone. It is not every time. You understand? Now, that is it on this trade analysis, GBP USD. Let us analyze AUD CAD. On AUD CAD, this is where our monthly equilibrium line is. Our monthly equilibrium line is here. The next thing is to check on the H3 time frame. We can see that we have our blue line below. We have our blue line below. We have our green line above, which means we have a buy alignment. In a buy alignment, we switch to the D1 time frame. On the D1 time frame, we are looking for a bullish candle. Now, this candle here is a bearish candle. That is not the candle we are looking for. This is a bullish candle, but we want a candle that have a rectangular body. So this is not the candle we are looking for. So the next candle is the candle we are looking for, because this candle looks like rectangle in shape. It looks like a rectangle in shape. Now, highlight the demand zone of the candle. Switch back to a lower time frame, and then mark out your proximal line and distal line in a more proper manner. You can see marking out the proximal line, the first area is here. You can mark it here. You can see we have two zones on this one. We have a hidden zone here. We have a hidden zone here. You can see how market came back to the zone. You see market is currently back to the zone now. market has triggered the zone. We are expecting market price to go up here. We are expecting market price to go up, or we are expecting market price to do what? To go to the lower zone and go up. Either of these two situations is going to happen, okay? Either of the two situations is going to happen. Now, that is it on this trade. That is it on this trade. I believe you can see the trade. It is a drop-based rally formation, a V shape. Market price, this is the drop, this is the base, and this is the rally in price. That's a V shape formation. But in the V shape formation, we have our proximal line. Our distal line is below here. Hold on, guys, hold on. Our distal line is exactly here. All right, guys, so that is it on this trade. You can see we have multiple zone on this trade. We have multiple zone on this trade. The first zone we have is we have the basing candlestick around here for the first zone. The distal line is here, the proximal line is here. Now, when I switch back to a lower time frame, there's a hidden zone around here, which means that we have two traps in the area. We have our first trap here. We have our first trap here. When I switch to a lower time frame, I can see that we have another trap. Another trap is here. We have our second trap here. So that is it on this trade, guys. AUD CAD. Now let's move on to USD CAD. We've already done the analysis on USD CHF. So let us move on to USD CAD. Now on USD CAD, this is the monthly equilibrium line. This is the monthly equilibrium line here. Then the next thing to do is to switch to the H3 time frame. On the H3 time frame, I can see that the blue line is above. The blue line is above. The green line is below. The current price is below, which is our green line. That automatically qualifies to be a sell alignment. Sell alignment. Then I'm going to switch back to the D1 time frame. On the D1 time frame, since we have a sell alignment, we are looking for a bearish candle. So the bearish candle I can see is this candle here. This candle here. All right. Now you need to highlight the supply of the candle, which is here. All right. The next thing you need to do is to switch back to a lower time frame. Now, when you switch back to a lower time frame, you can see this is where the zone is corresponding to. This is it here. It means we are expecting price to come here and go down. Okay. So just make sure you mark out your proximal line and distal line in a more proper manner. However, there's something you guys need to also understand. There's something you guys need to also understand. You cannot just go and start taking any zone you like. Now, this zone right now, personally for me, I want to be taking it. And the only reason why I'm not going to be taking it is because this zone is not sitting, the candle is not on the right location. It is not in the right location. Remember, we have different types of location. First of all, our zone, our proximal line, distal line zone is sitting in the right location of the candle. That is location 1. Location number 2, what about the candle itself? The candle itself is not sitting in a proper supply area. You can see what is a supply area on the higher time frame. When we say supply area is this type of area. You see, whenever price come into this area, market price usually rejects. Whenever price come into this type of area, market price usually rejects. So this is a major supply area. And if you have a sell trade around these areas, your trade is going to play out. It has a higher probability of playing out the way you expect it to play out. You can see here, this is a major demand area. Which means that Market price usually rejects. Whenever market price come into this area, market price usually reject. That is why when market price came here, you can see market price is currently buying. Market price is currently moving up. Now, using the same logic, this is how I analyze my trade. If you guys don't know, using the same logic, where is this trade sitting on? Where is this candle sitting on? Is this a supply area of the candle? For me, that is not a good supply area. The supply of the candle, I have if the zone is sitting on this area, I can assume that area is a supply area. That is a supply area. So that is what I mean. Okay, that is what I mean. Let me show you more examples on the next pairs. Now, you have to understand what a good location is as a trader, and you also have to understand what a bad location is as a trader, okay, as a trader. Now, let's analyze Euro AUD. Let us analyze Euro AUD. On Euro AUD, this is the monthly equilibrium line. The monthly equilibrium line is here. The next thing is to check the H3 time frame. On the H3 time frame, we can see that the blue line is up. The blue line is up, the green line is down. The green line is down. Okay. Now, that is a sell alignment. In a sell alignment, we are looking for a bearish candle on the D1. Now, the only bearish candle I can see is this bearish candle here. This is the only bearish candle I can see. And it is a good rectangle candle. So highlight the supply of the candle. Highlight it. Switch back to a lower time frame to mark out your proximal line and distal line in a more proper manner. So I think this is the way to mark it in a more proper manner. The distal line is at the highest point of the base, which is here. The proximal line is at the opening of the basing candlestick that is here. Okay. So that is it on this formation. That is it. Highlight your zone. Highlight your zone. Now, after highlighting your zone, to know whether your zone is sitting in the right location, switch back to the D1 time frame. Now, the zone is sitting in the right location. The zone is sitting in the right location, okay? It is sitting in the right location. It is sitting in the right location because this is what the zone looks like on a lower time frame. So it is sitting on a right location. When I switch to the D1 time frame, the zone is sitting on the right location. That is the location of the supply of the candle, which is a good location. Now, there's another type of location that you guys you need to be aware of. There's another type of location. Now, you can see here we have whenever market, this is a supply zone, higher time frame supply, higher time frame psychological supply level. Whenever markets come into this area, market usually rejects in the area. Market usually rejects. So that is a psychological supply area. The same thing applies here. The same thing applies here. Whenever markets come into this area, it rejects. You can see whenever markets come here, it rejects. It means that this area also is a major supply area. Whenever markets come into the area, you should expect markets to reject the area because the spirit in that area is overall supply area. It is a major psychological supply area, okay? You need to also know how to consider all these things whenever you're analyzing the market, okay? Whenever you're analyzing the market. So you can see this is a psychological demand level. This is a psychological demand level here. This is just another example. You can see whenever market price come into this area, market price usually rejects. On the D1 time frame, market price usually rejects. So isn't it good that you have your buy trade around here? It is good if you have your buy trade around here. But if you have a sell trade around that area, it is not good. It is not good, okay? It is not good. So make sure you understand how to analyze psychological demand level, psychological supply levels, and so on. You can see here, this is a psychological supply level. Because whenever market price come into this area, you can see market usually rejects whenever markets come into this type of areas. So in the future, if let's say, for example, market price happens to come back into those areas again, you should expect market price to reject the area again. You should expect market price to reject the area again. For example, look at it. Let's say, for example, if market price happens to come back into the area here, you should expect market price to reject the area around here again. So that is what usually happens. And you can see when price came back into the area, you can see how market price rejected the area. It's rejected. Okay. So you need to know how to understand the two types of psychological level that we have. We have the location of a candle. We also have a psychological type of location. Okay. Type of location. All right. So that is it on this trade, guys. That is it on this trade. Now on this trade, we don't have any hidden zone. You cannot mark out any hidden zone here. This zone is okay. It is sufficient enough. The zone you have here is sufficient enough. Now let's move on to GBP AUD. GBP AUD. On GBP AUD, this is what we have. The D1 time frame, the monthly equilibrium line is here. The next thing is the H3 time frame. On the H3 time frame, we have the blue line. The blue line is above, the green line is below, since we have the current price there. And I told you guys to always use the current price as your green line at the back of your mind. At the back of your mind, your current market price, should always be your green line. That is whenever the trade has not triggered yet. So far as that trade has not triggered yet, okay, make sure you use it. Now we have a sell alignment here. Switch back to the D1 time frame. On the D1 time frame, we are looking for a bearish candle. Now this is the bearish candlestick we have, and that is the supply of the bearish candle. The next thing you need to do is to switch back to a lower time frame. Now when I switch back to a lower time frame, I can see that this is a rally-based drop formation. This is the origin of the rally in price. Market price started to rally from here, and this is the base, and then we have a drop. So that is A-shape formation. This is an A-shape formation. A-shape formation. Now in an A-shape formation, which is a rally-based drop, you need to understand the basing candlestick. This is where our basing candlestick are, right? Remember, I told you guys about basing candlestick. Basing candlesticks are small candlesticks, whereby if you mark out a box around it, the candlesticks are going to fit inside the box. Remember, guys, I told you about this, isn't it? So that is it. Now, the distal line of the formation here, this is the highest point of the zone of the formation. And since this is the basing candle, you need to mark out your proximal line at the opening of a bullish basing candle, which is going to be here. All right. So that is the reason why I mark out my proximal line and distal line in that manner. All right. That's why I mark out my proximal line and distal line in this manner. Okay. So I believe that's fine. That's fine. Switch back to the D1 time frame to see where the zone is. You can see the zone is currently on the you can see this is where the zone is right now on the D1 time frame. You can see the zone is on the supply side of the candle which is okay, all right. So that is it, guys. That is it. Now let's check on GBP card. On GBP card, this is the first thing we need to do to mark out our monthly equilibrium line here. The next thing is to check the H3 time frame. We have a buy alignment since the green line is above the green line is above, the blue line is below by alignment. Then we check the D1 time frame. On the D1 time frame, we are looking for a bullish candle. This candle is not what we are looking for because it looks like square. This candle is not what we are looking for because it looks like square. This candle is what we are looking for. So highlight the demand of the candle. Okay, highlight the demand of the candle. But remember, I told you guys, I don't like to see my zone, my weekly zone, very far away from the, I don't like to see my weekly zone to be far away from the weekly equilibrium line. Okay, so but this is the zone. However, this is the zone. Okay, this is it. Mark it out, and that is it. Okay, that is it. That is it. That is it. On this one also, you don't have to mark any hidden zone. I saw immediately I switched to the H3 time frame. I can see that the formation on the H3 time frame is a drop based rally formation. Drop based rally. So after seeing your formation, immediately when you see your formation of a drop based rally, you can see the picture is very clear. Now you can also see that this is the basing candle. The small candlesticks we have, that is our basing candlestick. Now you have no reason to switch to a lower time frame again. I don't have right now, I don't have any reason to switch to H2 time frame because I've already seen what I needed to see on H3 time frame already. I've already seen what I want to see on the H3 time frame already. So I don't see any reason why you after seeing what you need to see, then you keep on switching to a lower time frame. Why should you switch? So far as you are able to see what you need to see on a time frame, you don't have to switch, you don't have to continue switching to a lower time frame anymore. Stick to that time frame that you saw what you need to see. Okay, stick to the time frame. So that is it on this analysis. The next thing is to analyze Euro NZD. On Euro NZD, this is the monthly equilibrium line. The monthly EQ is here. The weekly is here. So you can see we have our blue line above, our green line is below. Remember, current price is our green line because at the back of our mind, we assume the current price is a green line. So we currently have a sell trade alignment. And in a sell trade alignment, we check on the D1 time frame. On the D1 time frame, we can see that we are looking for a bearish candle, and this is the bearish candle we have right now. So switch back to highlight the supply of the bearish candle, switch back to a lower time frame, and then this is the area of the zone. This is the formation. Okay, this is the area. Okay, and also make sure it is a strong formation. If it is not a strong formation, you need to ignore the trade. If it is not a strong formation, you need to ignore the trade. Okay, so for me personally, this is not a strong formation because the movement, I don't expect banks, whenever banks are going down, look at how the movement was here when banks was going, when the market was going down here. So the movement, you don't expect banks to move the market like this. It is very weak. It is a very weak movement here. It is a weak movement. You expect banks to move the market in a strong way going down, okay? Not a weak way going down, okay? So for me, this is not going to be a good trade, a good trade. However, this trade, let us check if this trade is sitting on in the right location on a higher time frame. By looking at it, it is also not sitting in the right location because on a psychological location, it is not sitting in the right location. So it means that the location is far above. You can see this is the psychological supply level here. So assuming the trade was sitting around here, it is going to be a good trade because that is the psychological supply level. Because whenever markets come into that level, you can see market price usually do what? Market price usually rejects. Market price usually rejects whenever market price come into the psychological supply level here. So that is it, guys, on this analysis. I hope you guys, I hope I'm able to answer some of the questions you guys usually ask me, right? So if you have any question, guys, make sure you ask me on the group. Don't send me any questions in a private in private. Don't send me any forex related questions privately. The reason why I created the group is so that everybody can speak out freely. Okay, make sure you are able to chat freely, so far as whatever you want to say to me is not a private matter that concerns your private life matters. Then you can ask me that privately if it is a private matter. But if it is about forex related matters, that has nothing to do with your privacy. So ask it on the group. Ask the question on the group, okay? So that is it, guys. Also, on this, the student that asked me about the question on multiple trade, I can see that you mark out multiple zone. You mark out this area, you mark out this area. I hope I was able to answer your question, because I told you that it is very wrong to mark out multiple zone like this. It is too much. The maximum you can do is to mark out at least 2 traps. Just set out 2 traps. If this is if this is the first zone, then your second zone should be very close. Your second zone should be very close here, right? So let's see if there's a hidden zone in the area. So let's see. So you can assume this is a hidden zone also around here. So these 2 traps are enough. This 2 trap is enough. It is enough like this. You don't have to mark out any more trap, okay? I hope I was able to answer your question. So that is it, guys. Also, guys, if you are sending me your screenshot, don't send your screenshots in a zoom out candle like this. The candle is zoom out like this. It is not a proper candle, like it is not proper. Make sure you zoom in your candle like this. It is also not proper to send me your picture like this. What am I seeing here? I'm not seeing anything here. Don't send me this type of picture, okay? It is very wrong. This is the proper size. You need to send me your candle in a more proper size like this. It is good, okay? So that is it, guys. This is Mr. Ibrahim, the trader of Gova Trading Academy. Once again, if you have any question, feel free to ask me your questions on the group. That is it. Have a nice day.